Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. The Federal Reserve did it. They cut rates by 25 basis points as expected. Now, we didn't really take them as being dovish, and in fact, Fed Chair Powell said in his press conference that this is more of a mid-cycle adjustment. He's not implying that the next 25 basis point cut is already given. However, we are seeing the odds for September. You're seeing nearly 75% likeliness that the Fed will cut again. And again, we imagine this dissipates a bit. The dollar index is trading higher. It's in breakout territory right now. The next stop, is really the round number of 100. You have a trend line going back almost 20 years that comes in just above 101 right now too. So there is a path of least resistance above 98.25. If we continue to close above 98.25, path of least resistance in the dollar index is higher. Overall, yes, this is a dovish move. They cut rates, but a lot of these expectations have been built into the market, and the U.S. is still the best house on a bad block. It's the other currencies that are contracting. I mean, look at some of the data we've seen. The PMIs are showing contractions in Europe and China. So really, the U.S. dollar is strong right now. And the U.S. growth, which Powell implied, is on track. So right now, our narrative has been we expect to see a light at the end of the tunnel, the U.S. data really start to turn a corner, and it's going to be put to the test here in the next couple of days. ISM manufacturing is due tomorrow at 9 a.m. Central Time. Non-farm payroll is out on Friday. So does this data confirm that narrative, or do we see poor data that rejects the dollar index closing up here on a weekly basis? The weekly close is going to be crucial. Now for the euro, we're below 111.25. That is a new low in the continuous contract on the year, and that paints a path of least resistance down to nearly 110. We have the levels on our FX rundown from Monday. On top of that, you have levels well below there, and there's a trend line in the euro similar to that one in the dollar I referenced, down near about 107.5. So weekly closes here are going to be crucial. Tomorrow as well in the morning, you have final PMIs coming out of the Eurozone, so keep an eye on that. The Bank of England has a policy meeting. They're not expected to cut rates. The British pound is trading at the lowest level since the first quarter of 2017, coming out of the Brexit vote. About 6-9 months after the Brexit vote, was lingering in the lows. So you see what the pound does here, but the dollar's strong, is pressuring other currencies. The yen is down on the session as well. Overall, it's surprising you're seeing a little bit of a swing on two sides. The treasury markets are trading higher. Well, the 30-year is trading higher right now, much higher in the session. We imagine it dissipates, but it's not working to help the yen right now. The yen is down in the session, but it's still right at that 92 mark, and it's holding strong support. The volatility in the equities is keeping a bit of a bid, relative to what the dollar's done, a bit of the bid in the yen. Treasuries, of course, as well. So we see how this trades through the overnight. We've seen it before. We've seen different reactions in markets 12 hours later, 24 hours later, as they've digested the Fed move. So look for volatility to continue, and a lot of support in the yen down at 92. Those levels are still valid from Monday's report. And then looking at the Aussie dollar, it's into this crucial level of support, 68, all the way up to 68.60. It's hitting into there. Chinese manufacturing data, a contraction, as I mentioned, was still just a bit better than expected. And then we got the private manufacturing HSBC manufacturing PMI tonight out of China, so keep an eye out of that. It's going to affect the Aussie dollar. And then with the Canadian dollar too, we're seeing both these currencies under a bit of pressure with the stronger U.S. dollar, but the Canadian dollar arguably had some decent data today. GDP just marginally a bit better than expected. However, you had some revisions lower on the raw materials price index and some of the other data that we did see. So it was sort of a push and pull there with the Canadian dollar, but it is at a crucial level of support. So if you're looking to buy something against the U.S. dollar, again, the Canadian is very constructive. 75.60 is our level there, but give us a call. We're here to help talk about anything on the board. A lot going on today. Don't hesitate. 312-278-0500. You can email us info@bluelinefutures.com. Check our website for updates. You can sign up for a free trial of research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.